Bitcoin Bulletin is live. Get ready for a rapid-fire rundown of the crypto world's hottest headlines. We're diving deep into Bitcoin's surprising role as a treasury asset, uncovering the game-changing Bitcoin standard strategy pioneered by Strategy, hearing from an early adopter who sold 100 Bitcoin for millions but has zero regrets, and revealing how Capital Group's massive Bitcoin bet has absolutely exploded. First up, the financial world is buzzing about Bitcoin's potential as a treasury asset. Is it just digital glitter or a genuine revolution for corporate finance? We're breaking down the intricate discourse surrounding this powerful digital currency and its place in the balance sheets of major firms. Then, we're exploring the incredible success story of Strategy, the company that embraced the Bitcoin standard. You'll learn how their aggressive Bitcoin accumulation strategy transformed them from a struggling software provider into a crypto powerhouse, even outperforming tech giants like Apple and Amazon. And you won't believe this. An early Bitcoin adopter sold 100 coins back in 2017 for $1.5 million, a decision that would be worth over $11 million today. But he has absolutely no regrets. We'll tell you why. Finally, we reveal how Capital Group's audacious $1 billion Bitcoin investment has skyrocketed to an astounding $6 billion. Stick around for all the details. Hit that subscribe button and ring the notification bell so you never miss an update. Bitcoin, the new treasury asset, it's more than just digital gold. The financial world is ablaze with talk of Bitcoin's role as a treasury asset, sparking a debate that echoes through the highest halls of finance. Is Bitcoin just a fleeting digital trend, or is it poised to fundamentally reshape corporate finance as we know it? This isn't just a simple question. It's a complex puzzle that challenges the very core of our established financial systems. Bitcoin has long been hailed as digital gold, a potential hedge against the volatility of traditional markets, attracting a wave of investors eager to be part of the crypto revolution. But what's the real story behind this narrative? Critics raise serious concerns, pointing to its wild price swings and the ever-shifting regulatory landscape that casts a long shadow over its practicality. So, can Bitcoin truly serve as a viable long-term asset for treasury functions? Or is it simply a way to shift financial risks into the unpredictable crypto seas? The mystery of Bitcoin's creator, Satoshi Nakamoto, who envisioned a decentralized financial system free from traditional control, adds another layer to this discussion. As the crypto space matures, that initial vision has become intertwined with speculation and market fervor. The significant entry of institutional investors has transformed Bitcoin from a revolutionary payment method into a speculative commodity, drastically altering how companies approach treasury management. The numbers are staggering. Over 250 firms now hold Bitcoin on their balance sheets, signaling a monumental shift in how corporations view digital assets. This trend suggests a reevaluation of financial strategies, but it also raises red flags about potential systemic risks. If companies treat Bitcoin merely as a liquid cash alternative, they might overlook its transformative potential as a dynamic capital source that could drive innovation in corporate finance. As we dig deeper, the implications of cryptocurrency regulation become critically important. Governments are increasing their oversight, and the outcome of their scrutiny on Bitcoin within corporate strategies could either build confidence in the sector or erect significant barriers to its widespread adoption. How companies report and manage their Bitcoin holdings is becoming paramount in this evolving regulatory climate. To truly unlock Bitcoin's potential as an asset, companies must adopt more sophisticated treasury management techniques. Simply treating it like static cash ignores its inherent volatility and competitive nature. Businesses need to shift towards strategies focused on maximizing yield and managing risk in a constantly changing market. Financial expert Thomas Chen emphasizes that the issue isn't Bitcoin itself, but how companies utilize it, moving from a passive reserve approach to actively integrating Bitcoin into their overall financial strategies. Recent data supports this strategic shift. For instance, crypto-collateralized lending surged to an impressive $53 billion in the second quarter of 2025, with decentralized finance platforms securing $26.5 billion of that total. This highlights Bitcoin's foundational role in the rapidly developing digital finance ecosystem. Ultimately, the ongoing debate about Bitcoin as a treasury asset reveals both unique challenges and exciting opportunities in the cryptocurrency space. Businesses ready to embrace Bitcoin must navigate its complexities, carefully balancing strategy, risk assessment, and compliance in a dynamic regulatory environment. This evolving conversation isn't just about changing corporate treasury narratives. It's a powerful call for responsible and innovative financial practices in this new digital age. The journey to redefine Bitcoin from a speculative novelty to a core component of corporate portfolios has just begun, and its future implications are truly profound. Don't go anywhere, because the future of corporate finance is about to get even more interesting. Next, we're exploring the groundbreaking Bitcoin standard pioneered by Strategy and how it's changing the game. The Bitcoin standard, how Strategy redefined corporate finance. What exactly is the Bitcoin standard, and why are forward-thinking companies adopting it? It's a strategic approach where Bitcoin becomes a primary reserve asset, and Strategy, formerly MicroStrategy, led the charge, beginning its significant Bitcoin accumulation back in 2020 when prices were a fraction of today's value. This bold move transformed Strategy from a struggling software company into a dominant force in the cryptocurrency arena. Their Bitcoin holdings ballooned from an initial 21,454 BTC to well over 600,000 BTC by 2025. This aggressive strategy didn't just boost their own value. It directly challenged conventional corporate finance, compelling other companies to reevaluate their asset allocation strategies. Strategy's performance has been nothing short of spectacular, consistently outperforming major tech stocks like Apple and Amazon, the renowned Magnificent Seven. Executive Chairman Michael Saylor attributes this remarkable success primarily to the appreciation of Bitcoin and the company's courageous financial maneuvers. Their market capitalization surged from a modest $1.2 billion to an astonishing $128 billion, a testament to how Bitcoin, when used as a treasury asset, can dramatically alter a company's financial trajectory. This isn't just about Bitcoin's price increase. It signifies a fundamental strategic shift reshaping the entire landscape of corporate finance. Crucially, leadership plays an indispensable role in the successful adoption of Bitcoin as a treasury asset. Michael Saylor's unwavering conviction and vocal advocacy have profoundly influenced investor sentiment and corporate decision-making. His vision has not only propelled Strategy's stock performance, but has also inspired numerous other firms to consider similar initiatives. Saylor's leadership exemplifies how a visionary approach can ignite corporate innovation. His ability to articulate Bitcoin's advantages as a long-term store of value has resonated deeply with investors, creating a powerful ripple effect across the market. This underscores the critical role leaders who embrace emerging technologies and undertake calculated risks can play in driving progress. Strategy employed sophisticated financial instruments, including convertible bonds and preferred stock, to fund its Bitcoin acquisitions. This allowed them to raise capital while minimizing immediate cash outflows, a method that might not be feasible for every organization. This approach highlights the complexities involved in integrating Bitcoin into corporate finance and the absolute necessity of a robust risk management framework. Furthermore, managing Bitcoin's inherent volatility is paramount. Companies pursuing this strategy must implement measures such as dollar-cost averaging and hedging to mitigate the risks associated with price fluctuations. These financial tactics are essential for maintaining stability in corporate treasury operations, particularly within the volatile Bitcoin market. The regulatory environment has also seen significant shifts, partly influenced by the actions of companies like Strategy. The introduction of new accounting standards for cryptocurrencies, such as the FASB's Crypto Fair Value Rule in 2023, has provided much-needed clarity for integrating Bitcoin into financial strategies. Despite this progress, navigating the complex regulatory terrain remains a challenge. Businesses must stay informed about evolving legal requirements and adhere to anti-money laundering (AML) and Know Your Customer KYC, regulations. While this complexity might deter some companies, those that persevere can benefit from the stability offered by clearer regulatory frameworks. While other companies can theoretically adopt the principles of strategies, Bitcoin standard. Achieving comparable success hinges on critical factors like timing, leadership commitment, and the sophistication of their financial strategy. Other firms might borrow elements of this model, but replicating its scale and market influence is unlikely without similar underlying conditions. The key lessons for businesses considering Bitcoin integration include the necessity of a strong risk management approach, a leadership team committed to advocating for new technologies, and a keen awareness of regulatory changes. Partnering with fintech providers can help address the technical challenges of integrating Bitcoin into treasury management, all while maintaining a long-term vision of Bitcoin as a store of value. As the global economy increasingly embraces digital assets, the lessons learned from Strategy's transformative journey will be invaluable for companies aiming to thrive in this new financial era. The future of corporate finance is likely to be significantly shaped by the acceptance of Bitcoin and other cryptocurrencies, heralding a new age of financial innovation. But what happens when you make a choice about Bitcoin that impacts your life, even years later? Next, we're sharing a story from an early adopter who cashed out big, but might surprise you with his feelings about it. Sold 100 Bitcoin for $1.05 in 2017. No regrets even at $11 million today. Back in 2017, when Bitcoin first touched the $20,000 mark, an early adopter made a pivotal decision: to sell 100 BTC and all his Bitcoin cash for an after-tax profit of $1.5 million. At the time, it felt like the ultimate win. Fast forward 8 years, and that same 100 Bitcoin would be worth a staggering $11 million, yet he expresses absolutely no regrets. "My choice 8 years ago gave me financial freedom at the cost of current net worth," he shared in a widely discussed post on Our Bitcoin. "It did not maximize my wealth, but it did help my sanity." This significant sale empowered him to take a year off work, a decision that ultimately led to full retirement. He never returned to his previous career. "Selling right then gave me the ability to quit my job and take care of sick family with no worries whatsoever," he explained. "That was really important in a really *TTY time for me." He used the funds to establish college savings for his niece, achieve debt-free living, and support causes close to his heart, including education and the arts. His investments in index funds have continued to grow, and he still retains some Bitcoin holdings. While acknowledging he could have accumulated an additional $7 million, he maintains he hasn't lost anything. "I have everything I want right now without the extra money. I have no debt. I have an old truck I like to drive. I have a decent bike. I own a house. I just don't want a lot of stupid *T, he clarified. This perspective resonated deeply with many commenters. One user noted, "The goal shouldn't be to be the richest in the graveyard. Your choice gave you peace of mind and allowed you to retire early. Sounds perfect." Another added, "If you think about it, you bought 8 extra years' worth of retirement and a worry-free living in exchange for higher investment return." In 2017, the cryptocurrency landscape was far more volatile and uncertain. Trustworthy platforms for borrowing against Bitcoin were scarce, and legal ambiguities were prevalent. "It was a definite inflection point," he recalled. "I suddenly had stupid profits in a highly speculative and potentially restricted illegal who-knows-where-this-is-going instrument." While some expressed regret over selling early, a significant number admitted they would have made the same choice. As one commenter aptly put it, "Whoever says they would have held was either already very stupid rich or just straight-up lying." He hasn't completely exited the crypto space. He continues to hold Bitcoin and occasionally shares updates on his early retirement journey. "I'm into my 8th year of retirement now, and it's pretty ****ing great, except for not having other retired local friends to do ***T with during normal working hours," he quipped. Reflecting on his decision, he confidently states he would make the same choice again. "I really do think I made a rational choice," he asserted. "I get to sleep in or travel or get whatever I need whenever I choose. so my material needs are fulfilled, that's worth a lot. From personal financial freedom to massive institutional gains, the world of Bitcoin is full of incredible stories. Next, we're diving into how Capital Group turned a billion-dollar bet into $6 billion. Capital Group's $1 billion Bitcoin bet skyrockets to $6 billion. Capital Group, a venerable investment firm with a 94-year history renowned for its cautious and traditional approach, has made waves in the crypto world. They embarked on a bold venture, investing $1 billion in Bitcoin-related stocks, and that investment has now surged to over $6 billion. The firm's strategic entry into the Bitcoin space began in 2021, led by Mark Casey, a senior portfolio manager with 25 years at Capital Group. Casey, a proponent of the value investing philosophies of Benjamin Graham and Warren Buffett, identified a unique opportunity in Bitcoin, treating it not as a speculative venture, but as a commodity akin to gold or oil. This perspective guided the firm's investment strategy. A significant portion of this investment was directed towards Strategy, a Bitcoin-focused company. In 2021, Capital Group invested over $500 million, acquiring a 12.3% stake. Despite Strategy issuing additional shares later, reducing Capital Group's ownership to 7.89%, the value of this initial investment has ballooned to approximately $6.2 billion. This remarkable growth is a prime example of how astute timing and thorough research can yield massive dividends. Beyond Strategy, Capital Group diversified its Bitcoin-related holdings. They invested in MetaPlanet, a Japanese hotel company that has integrated Bitcoin as a significant balance sheet asset. Additionally, they acquired shares in Mara Holdings, a Bitcoin mining company. These investments clearly signal the firm's confidence in the long-term viability of cryptocurrencies. These strategic decisions were not made impulsively. Mark Casey and his team conducted extensive due diligence, meticulously analyzing the financial health, market position, and risk profiles of each target company. This disciplined approach mirrors their methodology for traditional investments in commodities like oil and gold, enabling them to navigate the crypto market's inherent volatility and achieve substantial growth. It's crucial to note that Capital Group's success is not easily replicable for all investors. The cryptocurrency market is notoriously unpredictable, and while Capital Group possesses the expertise and resources for risk management, smaller investors may not. Therefore, this success story should not be viewed as a guarantee of similar outcomes for everyone. In summary, Capital Group's initial $1 billion investment in Bitcoin-related stocks has transformed into an impressive $6 billion in gains. This achievement demonstrates that even established, traditional firms can achieve success in new and volatile markets by employing intelligent strategies. Through strong leadership and meticulous planning, Capital Group has set a precedent for how traditional finance can effectively integrate with new technologies, potentially encouraging more financial institutions to take cryptocurrencies seriously in the future. That's a wrap on today's top stories, but before you go, let's do a super quick recap. And that's a wrap for Bitcoin Bulletin. We covered Bitcoin's rise as a treasury asset, Strategy's groundbreaking Bitcoin standard, an early adopter's no regrets Bitcoin sale, and Capital Group's massive Bitcoin investment explosion. Don't forget to like this video, subscribe to Bitcoin Bulletin for more crypto insights, hit that notification bell, and follow us on all social platforms for real-time updates. See you next time.